free flow, just
Okay.
have you come up with questions regarding, I wanted to kind of touch on the different types of orders, whether that be like limit order, stop
Okay.
limit, and then sell stop limits, etc. And then some more complicated, not just the basic option questions, but more complicated option questions when it comes to finding max gain, max loss. I think I'm pretty good on it. I just want to be sure.
Yeah, I don't know if you're, I mean, there's nothing beyond the more complicated than, the spreads and the straddles or
Yeah.
straddles with different combinations. So let's start with types of orders.
Okay.
I think a lot of people get hung up that we only have one order and one order only that has no contingencies, no qualifiers.
Okay.
And the only order we have that has no contingency, no qualifiers is a market order.
Okay.
With a market order, you're telling me that execution is more important than price. You want immediate execution at the best available price, you spend too long in our business, you can get aggravated with people who don't understand a market order. I can't tell you how many times I'll be using a market order outside of our industry, and somebody will start telling me about pricing and this and that. I said, listen, I just want to settle up and get out of here. Just tell me, what is it? What's it costs at the best possible execution? And that doesn't give me an excuse to rip somebody off, right? So that means if we were looking at a stock, and right now in the auction, which means it's test question, a listed security. If I said auction, the minute you hear word auction, we must be talking about an exchange. This isn't a market maker.
Yep.
This is somebody who is wants to buy at their price or better. We said test question, the New York Stock Exchange can best be characterized as a auction order driven market. And I say right now, Bo, in the auction,
bid is 45. The ask is whatever, 45.
Yeah, and remember that there's going to be some size there.
Yep.
And what's determining this is limit orders. So be careful. This is not market makers. So, the New York Stock Exchange has been around since, 1792. And in 1792, no telephones, no electronics. And if I was the specialist, now known as the designated market maker, I say to floor brokers, why don't you leave your limit orders with me? And if I can get your customer his price or better, I will do so.
Yep.
Or free you up to go do other things. As a floor broker, you say, well, Dina, how long are you going to watch my order for you? I said, well, you want to give me a time qualifier? On this limit order, is it going to be a day order? Very testable. All orders are considered day orders unless somebody says differently.
Yep.
And you say, well, no, Dean, let's make it GTC. Let's make it GTC.
Good till cancel.
Yeah. And the specialist, the designated market maker, says, well, I'm going to clean up my order book in April and October. So unless this thing is properly renewed, I'm going to take it off my order book. So I say, Bo, right now in the auction, it's a double auction. And what we mean in the New York is a double auction is we have both buyers and sellers. It kind of drives me nuts when I go to eBay. eBay drives me nuts because it's a single-sided auction. Mm-hmm. I say, man, I'd like to be able to go on eBay and as a seller post my bid. Say, if you have a North Face Galeo 3700, I have a bag fetish. I don't get to travel as much, but my people make fun of me. And sometimes I'll see one on eBay and the guy said, do you know what this costs new? I say, I do. I bought one new. But as you know, there's no longer a primary market for the North Face Galeo 3700. The only place you can get them is in the secondary market. And, I see your asking price, but I'd like to be able to go to that section on eBay and put, if you have a North Face Galeo 3700, I'm a buyer, and put in my bid price. So that means we have buyers and sellers. And so the limit orders are representing, that's a buy limit there. And this over here is a sell limit. So somebody at some New York Stock Exchange member firm has said that they want to buy 800 shares at 45. and somebody has told their floor broker they want to sell 500 shares at 45.05. There's an implied or better. So as a buyer, your price or less. These limit orders are setting the quote on the New York Stock Exchange. As a seller, your price or more. Now, so if you give me a market order to buy or sell, just make up one. I don't care which one you want. You're going to give me a market order to buy or a market order to sell?
To buy.
So you say, Dean, let's buy at the market the stock. I say, well, it looks like right now, if we buy it to the market, we're going to match you with a seller. And it looks like 45.05 is what we would get on your market order as a buyer. Now, we might be pleasantly surprised. We might actually be pleasantly surprised because we might get New York prides themselves on this. You might be pleasantly surprised and get some price improvement. But using a market order, I say the best available price in the auction as a buyer, Bo, I'm going to match you with a seller. Now, if you give me more than 500 shares, it's likely you might get two reports. I'll say you picked up the first 500 shares at 45.05. And then maybe I say you picked up the second 100 shares at 45.06. Might get more than one report because right now, Bo, there's only 500 shares there. Mm-hmm. Now, if you don't want to get more than one report, you could add a qualifier or give me a limit order or add some other things to it. Now, the reason I said you might be pleasantly surprised is because the specialist, the floor broker, the designated market maker, is allowed to trade for his own account in between those two prices. So right now, as a specialist, the specialist right now, designated market maker, could buy that stock at 45.01 and can sell that stock at 45.04. The specialist is allowed to trade the stock in between what we call, test question, the inside quote. Now, please note the inside quote is not being set by market makers who are willing to buy or sell into their inventory. This inside quote is being set by the orders, the limit orders. Remember, we said the New York Stock Exchange can best be characterized as an auction order-driven market. So you give me a market order to buy, and I call you back and I say, you bought 500 shares at 45.04. You go, wow, I thought I was going to pay 45.05. I said, so did I, Bo. The specialist stepped up. He filled you out of his own account. Now, listen, if this is we'll just assume this 45.05 is a sell limit from Merrill, let's just say. And Merrill says, did you trade ahead of us? The specialist says, well, I did. I did trade ahead of you, but I was willing to trade at a price better than yours. So that's okay, right? The specialist is narrowing the spread by being trapped in here. That narrows the spread. Now, you gave me a market order, and that was pretty straightforward. But if you gave me a limit order, I'd say, hey, listen, if you're going to give me a limit order, we might want to consider whether your limit order is going to be competitive, Bo. Now, again, this is another area I think a lot of people get hung up. There's only two types of orders. I think people think there's a zillion, but there's not. There's only two. There's two types of orders. Those are market orders and limit orders. Now, granted, there are a zillion subcategories or qualifiers or contingencies you can add to an order. But at the end of the day, it's either a market order or it's a limit order. Now, with a limit order, you're saying your price or better. So as a buyer, your price or less. As a seller, your price or more. So again, just pick one. Doesn't matter whether you're a buyer or a seller on a limit, just pick one.
Seller.
So if you're a seller and you want to be competitive with your limit order, I would say let's put in your limit order at 45.04. Because if you put in your limit order to sell at 45.06, you're not competitive.
Yep.
I say, but you're not competitive because right now there's already somebody who's willing to sell at 45.05. So, again, very testable on this limit order scenario. And I'm sure you've used your memory aid that we highly recommend. You remember what the memory aid is to where we place these orders in relationship to the current.
Bliss.
Yes, lobs over bliss, right? We haven't talked about stop orders yet. We're just talking about these limit orders. Oh. That a buy limit goes above the market. By the way, I think that makes sense when you think about it. Buy limits go below the market Because, if even if you didn't know this rule, there's some people think we're going to teach you lessons the hard way. And it would be foolish for you
To
to
buy
tell me you want to buy the stock at 48 or lower instead of 45 because you get filled.
Yeah.
I say, yeah, hey, you must be new. I mean, why would you want to pay that when you can pay less is the point. So indeed, buy limits are going to go below the market. Let me just get a little smaller font here. And sell limits are going above. Slobs over bliss. Now, the orders below the market, you wouldn't want your order to be triggered as a result of a dividend. So another reason that slobs over bliss is important. Oh, geez, I'm messing up here. Is because you wouldn't want your order to be triggered as a result of a cash dividend. Because you remember what's going to happen with a cash dividend? It's going to go down by the amount of the dividend, right?
Yeah.
And so we're going to adjust orders below the market for dividends. And if you don't want me to do that, I mean, you say, hey, Dean, I travel a lot, whatever. I know you normally do that, but in my case, do not do that. That's fine. If you want, we'll code your account DNR. So orders below the market, let's just put that in there, a little thing here. Orders below the market are adjusted. It makes sense it's only below because there's no way to accidentally trigger something that's above the market, because it's the idea here is it's coming down by whatever that, on the X date by that amount.
Mm-hmm.
And if you don't want me to do that, based on your pre-study, what we would code it.
Orders below the market that are adjusted.
You don't want me to do that. You say, Dean, I know you normally do that, but leave my orders alone. I don't want you to reduce them. That's called DNR.
Okay.
That stands for do not resuscitate.
Okay.
No, it stands for do not reduce. Do not reduce. So we have market orders and we have limit orders. And then again, if you want, you can add some more contingencies to these orders if you'd like. If you give me a limit order, I say, you say, Dean, you said you want to buy it. And let's say you're going to put in a buy limit at 4506. And you make it a GTC, And you say, Dean, I know right now that I can't get it for 4506. But some maybe will sell the guy ahead of me, he gets filled and then I'm next in line. By the way, that's important because that could represent just one other point here. This 500 could be two orders, one for 300 and one for 200 that are both at the same price. So if those are, we don't know what that 5 round lots, by the way, round lots, very important. So yeah, that's 500 shares. So it's like learning a foreign language. So that means I say, Bo, there's 800 shares on the bid and there's 500 shares on the ask. If that's two orders, we timestamp it, and the person who gets filled first is the person who's there first, right? So, if you want to go to the front of the line, it's very simple. You just give me a better price, right? If you give me a better price, you go to the front of the line. If you don't want to give me a better price, then there's a tie. Like there's more than one person at 4506. It's whoever got there first. Now, to make sure there's no shenanigans, we audit orders. You remember how we track all the orders? That's called the order audit trail system. So that we know, whose order was placed where and when it got executed. And, that means we'll have less shenanigans than if we didn't have OATS. I'm oversimplifying to a certain extent, but that's kind of our job. Anyways, so you say, well, Dean, I'm a little concerned that maybe, when it gets to 4506 and you said you want to buy 500 shares on a limit of that. And, I don't want to get 2 reports. I only want to get, one fill at 500 shares at my price or better, or I want no fill. And I said, well, okay, Bo, if you want to do that, we can code your account or add a qualifier. Now, remember, the test point is the more qualifiers you add to the order, the less likely it is to get executed.
Mm-hmm.
And so, if we want, we could say fill or kill. You remember what that means?
Yep. Either fill it or cancel it.
Yeah. I mean, I want it all and I want it now.
Yep.
When you say, well, then that's kind of harsh. That seems kind of aggressive. I go, well, fill it or kill it.
Yep.
I said, well, if you think that's too aggressive, if you want, we could make it instead of fill or kill, immediate or
Yep.
cancel. Now, fill or kill, fill or kill, I want it now.
Okay.
But unlike fill or kill, I will accept partial execution. So here you're saying on the 500 shares, you'll take 200 if I can get it for you. Right. And we'll cancel the 300.
Got it. So
fill or kill, you're saying you want
we'll
all.
give partial.
Yeah, you'll accept partial execution. In fact, maybe we should, that's the key point. So let's not. Sunday Funday. I just can't believe how many people are getting tutoring on a Sunday. But I mean, I think a lot of people must be working. I mean, I'm just totally booked today. So I apologize if I'm a little not on top of my form. But anyways, yeah, that's the point, right? Fill or kill. I want it now and I want it all.
Yep.
And all of it. And a meter to cancel, I want it now, but I will accept. And your point, that's the testable point. I will accept partial execution, but will accept partial execution. Okay, and then we have one last thing. So you say, well, Dean, I want it all, but to be honest with you, the timing's not such a big deal. I mean, if I can get my price, I'm willing to hang out. And so our last thing we could add to this thing is all or none. Now, like fill or kill, you want it all, but you're unlike fill or kill willing to wait.
Yep.
So you're saying you want all 500 shares and one fill, but you are willing to wait. So you say, Dean, what's happening? I said, well, right now we're waiting. Let's just go back now. And all or none. And it all willing to wait. So as we see here, let's get rid of this. So again, we're going back to this quote and you're saying, Dean, what's happening in the auction right now? I say right now, Bo, in the auction, the bid is 45, the ask is 45.05, 8 by 5. There's 800 shares at the bid. There's 500 shares at the ask. And you say, Dean, I want to buy 800 shares at 45.05, fill or kill. I say, well, if you're a buyer, I'm going to match you with a seller and it's a kill. Because there's not somebody who's willing to sell you 800 shares at 45.05.
Yeah, only 500.
Yeah. If you said, Dean, let's buy 800 shares immediate or cancel at 45.05, I say, Bo, you got 500 shares on your immediate or cancel, not 800 because there wasn't another 300 shares there.
Yep.
You say, Dean, what's going on with my 800 shares at 45.05? All or none. I said, well, it's still working. I mean, there's, not 800 shares. Maybe somebody will show up with another 3 there and then there'd be a fill for you. Now, remember, though, you still could get executed here, even though it looks like you won't, because remember, the specialist could just step up and fill you.
Yep.
Yeah, he could step ahead and say, you're filled on your 800 shares at 45.05 at 45.04. Listen, in the over-the-counter markets, Bo, none of your New York trading, you might be pleasantly surprised in an auction, but in a over-the-counter transaction, you are never going to be pleasantly surprised.
Yeah, it's all negotiated, isn't it?
Yeah, and so there's no chance you're going to be. I'm going to call you with some market maker who, did you a favor. So, if you worked at, Robinhood or Schwab or TD Ameritrade, and we were taking calls from angry customers about trades, I'd be willing to bet you, Bo, that 90% of the unhappy customers did an over-the-counter trade that they're unhappy with. Mm-hmm. And sometimes it's hard for us to articulate to them that we didn't do that to them. Somebody else did that to them. right? Now, in terms of some of the other types of orders we have, or I should say orders qualifiers, one thing we have in our marketplace is we have people who practice technical analysis. These are people who like to chart stocks, and, they have a bottom line and a top line. And test question, you know what that bottom line and the charting pattern is called?
Support.
Right on. And what is that top line called?
Resistance.
And, maybe we're looking at Apple. And we'll just put over here. Here's a chart of Apple.
Finally broke 3 trillion.
Yeah, I saw that. That's crazy. Mega cap. I always think like mega shark. So I heard that it came back down. So this way is, let's just put that in here. Going this way is price, and going this way is time. And, there's some charting patterns. As a technical practitioner, I don't really believe in buying the stock when it's stuck in a trading range. I believe in buying the stock when it either, breaks through that, or, it breaks through that way. So I don't believe in buying that. Now, there are 3 uses of what we call stop orders, and very testable. The 3 uses of a stop order are to establish a stock position. So, sometimes technical practitioners, I'm going to go over this, will put in a stop to establish either a long or short position.
Mm-hmm.
Another use of a stop. Now, remember, whenever there's 3 of them, we can expect a question on the test like all the following except.
Yep.
Right. So we also use stop orders to stop a loss. That's another use of a stop order. That's, by the way, the most popular use of this.
Yeah.
And so that's why we call them stop loss orders, because that's how most people use them. And then the last version of this is to protect a profit. So, I told you I'd probably get fired if I worked at a brokerage from nowadays, because, I don't have the people skills I used to have. So what I mean by that is, if you call me and you say, hey, Dean, I want to put on a stop order. I say, Bo, so let me get this right. You're going to put in a stop order. You're trying to establish a stock position, stop a loss, or protect a profit. I go, well, no. I said, well, then you're confused, my friend. I mean, those are the uses of a stop. Now, we have, before we place our stop order here as technical practitioners, we'll start as technical practitioners. And before we start as a technical practitioner, I don't know why it's erasing the wrong thing here. I'm trying to get rid of that. Well, close enough. There we go. Before we place this order, besides just the typical support and resistance line, another pattern you're held accountable for is a head and shoulders pattern.
Yep, at the top.
And you have 2 versions of a head and shoulders pattern, charting pattern. And, as technical practitioners, we like head and shoulders patterns because, again, as a technical practitioner, I want the stock. I don't want to be, buying or selling Apple when it's stuck between 175 and 190. I only want to buy it when it moves. And, one of the reasons I was familiar with it having breaking out and being $3 trillion is because even as I was tutoring people and teaching, I use Apple a lot. And I taught like 4 or 5 months in a row where Apple was like stuck at 160. And I kind of kicking myself a little bit, Bo, because I got, man, for a stock with a beta like Apple, that seems to be stuck in a trading range. It's going to break out someday. I should put in a buy stop. So now I look back at those slides 6 months ago, like, oh man. Anyways, that is a test question. What is the head and shoulder pattern? Do you know, based on your pre-study, what a head and shoulder pattern is a signal of?
I do. Yeah, it's when it's at the top of it. There's going to be a downturn.
Yeah, it's a reversal.
Yeah,
it's a reversal, right? And you were right. This regular head and shoulders is the end of the bullish trend.
Start over there.
Yeah, that's very much a test question. And the beginning of a bearish pattern. So what I would do here as a technical practitioner is I would place my sell stop maybe at, this is a personal thing on the test, they would just tell you, but I want to give it a little room to kind of bounce around, but they'll just tell you what you do here. You're not going to have to make a decision where we place that. Let's put our sell stop at 173. Now, what I'm trying to do here is establish a short position if Apple trades through 175.
Got it.
Right. So that's a use doing this, do that. Now,
So
to be honest with you, I don't care.
You would place that, you would place that when the stock is trading at, say, 170.
Yeah, well, no, we can't do it at 170. Remember, the sell stop has to be placed below the marketplace.
Okay. Sell stop.
Very testable. Below.
Hobbs and Bliss. That's right. Got it.
Yeah, below the current market price. So I couldn't do that if I wanted to. Sometimes I haven't had a cup of coffee and I try and put in orders where I can't. So, but remember, I don't really care. There's another version of this head and shoulders pattern, right? What's the other version of this? We have what's called an upside down head and shoulders. Or I'll say it the way we say it on this, inverted head and shoulders.
Reciprocal.
Not a joke. Head and shoulders isn't a shampoo to take a bath in the stock market. It's a signal of a reversal. So this one would be the end of the bear.
Start of the bull. Yep.
Yeah. And so that means if I see that pattern as a technical practitioner, I'm going to place my buy stop above the current market price. So I see that inverted head and shoulders. Maybe I go up here and I put in a buy stop at 193 or 192, whatever, floats my boat. Right. Whoop. There we go. All right. So what they love to do on the test is they love to say, with Apple trading at, let's just put an Apple price in here. With Apple trading at 185, you place either a buy stop or a sell stop. Doesn't matter. And then they say the following trades then occur. Right. So now what we're looking for once we've done that is, we'll just let's get a clean board. So we're saying Apple's at 185. A customer places a sell stop. I'll give you the choice. You want to go long or short? What do you want to do? You want to go long or short?
Let's go long.
Okay, so that means we're going to use a buy stop then, right? Mm-hmm. So we're going to place a buy stop on Apple. Very testable. Has to be above the current market price, 188, let's say. So now what you're telling me is your broker that if Apple trades at or through 188, when you get on board the train, you want to go long. Okay. So you're using this to establish a long position. And then what they do on the test is they show you a sequence of trades. And what they're going to ask you is, does this ever become a live order? Now, be careful. This may or may not ever become a live order.
Yeah. So,
when you're going through this sequence of the trades, you got to be real careful here. And so the next trade is 186. No. Anything happen?
No.
No, we're looking for a trade in the sequence at or through 188. Next trade is 187. Anything happen?
No.
No. Our next trade is 187.99. Anything happen?
Nope.
188.01.
It's triggered.
Yeah, ding, 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 ding. Two separate events. What I kind of like to do is I like to kind of say, okay, well, let me just go through here and then look at it and see what happens. And I say, okay, well, nothing happens here, nothing happens here, nothing happens here. Ding, 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 ding. And that's where it gets triggered or elected. Now, two separate events, a lot of times
it's executed, right? It's just
triggered. That's exactly right. Very testable. Yeah. It's two separate events. So I can't tell you how many customers watching CNBC, right? So you're watching CNBC, you're watching the Apple trades go by on CNBC. You can watch the tape. And you see this at 188, 81. I can't tell you how many, when I was a practitioner, how many clients would go, oh, that's my trade. I go, Bo, that's not your trade.
Yeah.
That isn't your trade in Apple. That's the trade in Apple that turned your suspended order into a live market order. Now, in the real world, there might be people ahead of you, but on the test, we assume that whatever that next trade is yours. So let's say the next trade is 188. And so now you've gone long Apple at 188. I say you got filled, two separate events, by the way. Very important. You know, I had somebody using somebody, you know, like Past Perfects. I think it was Past Perfect, maybe it was STC. And they had a different way of saying separate events. I think his material said upticks or something. I don't know. But what they're trying to get at is understanding this is two separate events. The trigger and the execution are different things. Trigger, you know, the way I think of it is I'm telling my broker, if this, then that. If the stock trades at or through 188, then I want to buy the stock.
Yeah.
Now, remember, we're hoping, and in terms of our chart we were looking at, we're hoping that this Apple's going to now go to, you know, $4 trillion in market cap, right? That's what we're hoping. That's what we're hoping. So two separate events. Now, these would be on the test. These are typically going to be labeled, you know, well, this will be trade, and they'll say trade like number 4. And this would be trade number 5. And then you would tell me on your exam that
It's 5.
Yeah.
Triggered at 4.
Yeah. By the way, even if we halt trading pending a news announcement, you know, that's your trade. So, you know, we don't expect there to be a gap in the marketplace, but, you know, because there's a continuous auction. That designated market maker or specialist is charged with maintaining a fair and orderly market.
Yep.
And what that means is a continuous auction. So we don't expect, you know, an exchange stock. By the way, Apple's NASDAQ, but we wouldn't expect it to drop either because there's a gazillion market makers in this thing. So we don't expect Apple's going to go from 188 and the next trade is 170. But if it does, you know, that's your trade. So, you know, that's something, you know, you should be aware of. So that's your trade. All right. So now we bought the Apple at 188. We established a long position at 188. And now what we might want to consider doing, so now we're long, is we might decide that we want to stop a loss.
Yeah.
So I say, hey, Bo, we just went long at 188. And I know we have great hopes for Apple. But what I want to suggest is that perhaps we admit at some point at what point this is a weed and pull it. You know, part of successful investing, Bo, is letting your flowers bloom, but more importantly, pulling your weeds.
Yep.
And a sell stop is an automatic weed puller. We're just going to say we're out of here. So maybe we place a sell stop. Very testable. Sell stops have to be placed where?
Sorry, I have to think about it. Slobs and bliss. So
Yeah.
below the market.
Please do. There's nothing wrong on your exam with thinking about it. Right?
Yeah.
So, you know, you know, there's no rush. I can't prove it, but if you have a time constraint, that's on you because they're not trying to sort people by how quick they think, right? As long as you come up with the right answer, you are correct. And so we're going to place our sell stop. How much money do we want to lose? Approximately what? We got a round lot. Are we willing to lose 200 or 300 or 400? What are we?
Put it at, I don't know, 178.
178. Okay. So you're saying 10 points, I'm out of here.
Yep.
Okay. So that's got plenty of room to do this. So we got our sell stop at 178. And let's say after we place the sell stop, Apple goes to 210.
We're excited.
Very excited. You know, I call you and I say, hey, Bo, well, the reason I've called is I think we should move our sell stop up. I think what we might want to do now is protect our profit. And so with your permission, what I'd like to do is cancel the sell stop at 178 because we don't need to stop a loss now.
Mm-hmm.
And what I'd like to do is move that up to protect our profit. And, you know, no sense going backwards here. Let me get a different color. So remember, we have to place our sell stop at something below the market. So let's put this in test phraseology. So we went long at 188. Apple is now trading at 210. And at 210. And we place, customer places a sell stop. Okay, where do you want to place our sell stop this time?
200.
Yeah, 200. You like those 10-point moves. 200. All right, so that's kind of cool. That means we're going to, protect this profit. Because remember, we bought at 188, so we're saying, let's move that up. And then again, the following trades then occur. Right, so now we're going to go through the sequence and see if we protected our profit. By the way, that could be the test question. What's the profit or loss as a result of the stop getting triggered? Now, before I go through that sequence of trades, remember there was another arrow in your quiver. Another thing you could have done is go long a put.
Yep.
Right, so long out. Geez, what the heck is that? And so we have 2 arrows in our quiver. The put would you'd have to pay a premium. You couldn't move it around, but you would have guaranteed execution at the strike price. Right. Okay. So let's look at some trades. It was at 210. And let's say the new iPhones start, their sales or whatever weren't what people were thinking. And 208, anything happen?
Yep.
207, anything happen?
Yep.
206, anything happen?
Nope.
By the way, that's a potential answer that nothing happens, right? I mean, that is a potential.
Nope. Triggered.
Yeah, now remember that could be through. There's no way on a number line to go from 203 to 199 without going through 200.
Yep.
But also remember in your exam, that could be 200, right? It doesn't have to trade at. It could trade at or through. Either way, now it becomes a live order, 2 separate events. So whether this is 200 or 199.99 or 199.98, it doesn't matter. It's now a live order, 2 separate events. We want immediate execution at the best available price. So here's where the order gets triggered. And then whatever that next trade is, it's going to be your trade.
Yep.
So there we're using our stop to stop the loss. Now, maybe you say, maybe this next trade, let's go back here. Maybe that next trade is 199.98 gets triggered, and the next trade is 195, and that's your trade.
Yep.
So maybe you want to say, Dean, instead of making this a sell stop at 200, let's make it a sell stop limit.
Yep.
So when we pull the trigger, we can either turn it into a market order or limit order. Now, I would suggest to you, right now, if we're looking at this sell stop, but all we have is one contingency, one qualifier. Out or through, send me home. Now, the disadvantage of making this a sell stop limit is now we got to be a little more careful on our exam going through the sequence.
Yep.
Because if it's a sell stop limit, once it gets triggered, it's not a live market order.
Has to be at that price or better.
Right on. So the seller, it's going to be your price or more. And so let's just reset here. And so now instead of placing the sell stop at 200, you make it a sell stop limit. You can have it at different prices even if you'd like. But the problem is if you make this a sell stop limit at, I think what is 10 points seems to be your favorite thing. There you go. If you make that a sell stop limit, now you got to be real careful, my friend, because now you're telling me that when I pull the trigger, you want your price or better. Yep. And nobody has to do business with you at your price or better. Right. So the following trades then occur, and that's the dividend. The more qualifiers or contingencies you add to the order, the less likely it is to get executed. Yeah. Anything happen at 207?
Nope. Nope. Nope.
Now, let me finish up the sequence of trades here, and I have a question for you after I finish this sequence of trades.
Perfect.
So my question to you is, did this order get triggered or elected? Did this become a live limit order based on the trades we have here? Did this order ever become a live limit order?
It did get triggered, but not executed.
You nailed it, right? Because out or through, there's where it became a live limit.
Yep.
And you're right. And that's a potential answer on the test, right?
Yep.
So, and that's the danger, right? This thing could go back to zero. Let's add one more trade. Let's say it pops back up briefly and pops up, and it's not likely that's going to happen, but that would be his trade. Now,
Yeah, that's
outside of Series 7 Fantasyland, you get to leave Series 7 Fantasyland when you test, Thursday and pass. I'm stuck here permanently. Wonder I'm demented. But in the real world, there could be people ahead of him. So, every once in a while, I say, "Oh, it's my trade." And on the test, that's his trade.
Yep.
But in the real world, when you're watching CNBC, sometimes you have to tell the customer, listen, hard to believe, Bo, there's other people trading besides yourself. So that's not necessarily your trade. On the test, that's your trade.
Yep.
In the real world, it's like a barber shop. You take a number. All right. So that's the version. I showed you how to use a buy stop to establish that stock position.
Yep.
And then we used a sell stop to either stop the loss or protect the profit.
Yep.
But remember, the other thing that could have happened in our Apple position, because remember, we're indifferent about whether we go long or short, is we could have had our sell stop get triggered and we could have ended up selling short the Apple. And I say, hey, your sell stop got triggered and you sold short 100 shares of Apple at, I forget what we placed it at. I think it was 173 or something.
Yep. So
we'll just put that. We'll just assume it's 173. And then the same deal here now. We're going to use our buy stop. So we showed you using a buy stop to establish a stock position.
Yep.
Now the other use we're going to use of a buy stop here is to stop a loss in a short stock position or to protect a profit. If the Apple goes down, we'll move it.
Yep.
So, why do we have, stop words? We use stop words. We're going to make this a straight buy stop. We're not going to try and get clever and, get our price or better. So we're going to turn this into a market order. So where do we want to place our buy stop to protect or stop a loss? How much are we willing to lose in this short position in Apple?
Let me think about those slobs. Sorry.
No, really, that's demonic. Listen, in that memory aid device, I can't tell you how many times people say, Dean, could I have used the slobs over bliss to get that answer right? And I go, wow, I never thought of, yeah, you can. I mean, that memory aid, it's one of the ones that yields lots of points. I mean,
Yeah.
I mean, there's not types of orders that are as testable as, investments, but I mean, it's definitely there.
Mm-hmm. It's going to be, let's just say 175.
Yeah. And your point, the thing you thought about is perfect because it's testable. Yeah. It has to be above the current market price, right? So that's very, very testable. Now, remember the other thing you can do to protect a long stock position is a long call. Yeah. So don't be a dumb bear, right? If you're going to be stupid enough to sell short the stock, I'm joking, but then be smart enough to either put in a buy stop or, buy a call contract. Same deal. And then we're going to tell you the following trades then occur. The following trades that occur. And so again, now we're looking for a trade at or through 175. Anything happen?
Nope. 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 Triggered.
Ding, 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 ding. Two separate events. And then the next trade, whatever number I put in there is going to be your trade. So maybe it's 174. And I say, well, we lost $100, but hey, as losers go, that's not so bad.
Yeah.
We lost $100 on a short stock position because we could have lost a lot more, right? Mm-hmm. If the stock continued to go up, that's the wrong direction for us. Now, if you want to be foolish, what Dean thinks is not testable. But if you want to be foolish, you can say, Dean, I only want to go home if I can get my price or better.
The limit.
Yeah. So if we pull the trigger, you can make that a limit order. Yep. And then on the test, you're going to have to be a little more careful going through the sequence, right? Because when it gets triggered now, you're a buyer and you want your price or less, and good news, you'd still accept 174, right? But if that was 176, 178, 180, 190, you're not out of this thing.
Yep.
So that's the danger of putting in the
No,
limit order. So we got two versions of that. And then your point, the mnemonic that's worth all those points is this big mnemonic here. Be careful with the mnemonic. What I mean by be careful is it slobs over bliss. But remember that slobs, there's two buy stops and both of them go above the market.
yeah.
And they both go above the market. And what I mean by that is bliss sell stops and sell stop limits go above the market. And then the yo remembers just to turn it into a mnemonic. So be careful that buy stops is buy stop that turn into market orders, and buy stops that turn into limit orders are both above the market. And then we have bliss. And that's worth some serious points. Okay, so we did market orders, we did limit orders, we did stop orders, we did qualifiers. There's one we have not talked about that's testable, and it's called a market not held order. Are you familiar with market not held?
Yes.
There's two test questions about market not held orders.
Okay.
The first test question on the participants of the New York Stock Exchange.
Okay.
Yeah. We have what are called participants, right? And one of the participants we've discussed is the designated market maker. Another participant is the floor broker. Another participant is the $2 broker. And another participant is a competitive trader. Hey, I told you I'm reading the great book about Michael Dell.
Yo, yeah.
Oh.
Wait, hold on. Let me think of the name of it. I know it.
I keep getting it wrong. It's play hard, win fair, or play fair, win hard, something like that.
Play nice but win, or play hard.
It's something like that. But anyways, he said that when it came time to raise some money, they went to New York, and his mom was a broker, and they went into E.F. Hutton, didn't speak to him, and then they went over to Payne Weber, and it didn't speak to them, and he said he went into Goldman Sachs. He said, "I like the vibe." These were, entrepreneurs, and Goldman Sachs raised him some private money, and then there was a little bit of a glitch in the marketplace when he was ready to do his first private placement, and all the deals fell apart except Goldman's private placement. Goldman's, he told him, "Hey, Mike, we're with you, buddy. Even if we have to reach into our own pockets as Goldman partners, we're gonna make sure you survive." And I joke sometimes bankers can be important to somebody surviving. You wouldn't think that Dell ever had any problems financially, but he was talking about his inventory and his working capital. So there's lots of, maybe I'll turn it into a series 7 quiz based on the book. Anyways, market not held. We have, competitive trader. Anyways, the other thing that was in there, and I lost some of the respect I used to have for Carl Icahn. Michael Dell just really tears apart Carl Icahn.
He does later in the
book. Man, he just says this guy is, he talks a good talk, but I made an offer at 14. I kept telling him, instead of bashing me, come up with what you're willing to pay for Dell. Yeah. If you're willing to pay $15 to go private, I'll sell you my shares in Dell at 15. Instead of telling everybody it's an insider transaction. I wonder when Carl's reading it how mad he is. Michael said he called him up and said, "Hey, why don't we have dinner and just talk about this instead of you bashing me on CNBC every day?" And his attorneys told Michael to keep his mouth shut. So, he's kind of gagged, even though he didn't want to be gagged. So you can tell in this book he doesn't want to be gagged anymore about that whole process. Anyways, I thought of Carl because Carl is a competitive trader.
Okay.
And so he had a membership in the New York Stock Exchange, so he could just trade his own account. Right. So he's, not tied to a particular security. He shows up in the crowd, he buys, he sells, he does whatever he does. So our first test question here, well, there's a couple. We could just go through this answer set. Who is charged with maintaining a fair and orderly market? You would tell me on the test. A, designated market maker. Right. It used to be known as the specialist. If I say who executes orders for clients of member firms, that's the floor broker. So if I tell you I'm the Goldman Sachs floor broker, that means I'm the guy down there executing orders for clients of Goldman Sachs. $2 brokers help floor brokers with order overflow.
Okay.
So, he says, hey, $2 broker, and I help, execute orders. And most of this is electronic now, but this is from the old days. So my test question to you is, which one of these participants has the market not held order?
Great question.
It's the floor broker.
Broker. Okay.
Yeah. So what I'm telling my Goldman Sachs floor broker is to take my order into the crowd,
Yep.
but don't tell anybody he has it, and do it at whatever time and price he thinks looks good.
Got it.
So let's just try one. And let's talk about
kind of like a discretion.
Well, be careful, because that's what I'm going to ask you. I'm about to ask you, I'm very testable. Is this a discretionary order? So I tell my floor broker, buy 10,000 GE, market not held.
Oh, no, it's not discretion because you told them what stock.
Well, more than that, you got to be tighter than that, my friend. I told him action.
Yeah, action. So it's a sell.
I told him asset.
Yep.
And I told him amount. The way to get that right is action, asset, amount. Very important on the test to know that time and price does not constitute taking discretion.
Yeah.
And a market not held order, there's other examples, but that's the one they like on the test.
Okay.
Market not held order is an example of an order that does not require discretionary authority as long as the 3 A's are present. Okay. So a couple test questions here. Who has the market not held order? The floor broker. Yeah, the floor broker. Market not held means he takes it in the crowd. Nobody knows he has it. Bam. He does it whatever time and price he thinks. So market not held, nobody knows he's holding it. Mm-hmm. And then when he thinks it's the right time, he does it. Now, depending on who your floor broker is, will depend on whether that's a good idea. Goldman prides itself on good execution. So I would have no problem with giving a Goldman floor broker a market not held order. You might say, gee, somebody who trusts me to kind of work this thing for him and get him a good fill. Now, remember, in those other orders we talked, I say at the market, my floor broker at Goldman has to do it immediately, right? Immediate execution at the best available price. Okay, so we talked about market orders, limit orders, stop orders, time qualifiers. I think that's a pretty good overview of this. The investment vehicles are way more testable than are the orders, but the orders are there. So definitely there. Remember, all order tickets, that's testable. All order tickets got to be marked long or short. Yeah. And remember, if it's short, there's a locate requirement. You can't do what is called naked short sellings to locate the security. And people get hung up on this all the time. So, if you want to go long, whether it's an option or stock, the two positions we have, whether it's options or stock, are long and short. And you're going to use an opening purchase if you want to go long the stock or long an option contract. Yeah. Because opening purchases are used to establish those long positions. And if you want to go short, you're going to use what's called an opening sale. Yeah. And all short sales, with one exception, have to be done in a margin account. So if what you want to do is sell short, you're going to have to open a margin account. Yep. You know what the testable exception is? When's the only time I'm going to let you do an opening sale and not open up a margin account? Kind of low probability, but
it's not. I don't think this is the right answer, but it's the only thing I can think of right now. If it's covered, or no.
Yeah, you got it. It's a covered call. Okay. So the only opening sale that can be done in a cash account, that can be done in a cash account, is a covered call. What I mean by that is an opening sale on a call that you are long the stock on.
Yep.
Other than that, you're going to need to open up a margin account. Yep. Okay, so I think it's about an hour. Is there anything else that was on your to-do list today?
Yeah, I just want to ask you like one or two questions.
Sure.
Margin that I did, and then the only other question I had for you is what's your favorite video you have on investment vehicles? Is there one in particular?
Man, they're like kids.
Yeah.
What was the question? My favorite video of my 100 plus
For
video?
investment vehicles? Like, I just want to go over and have a refresher.
Well, here's the three. Let me give you the three big ones. So,
Yep.
function three is 91 questions,
Yep.
and that's investment vehicles, right?
Yep.
And I have two things that are appropriate. You know, I on the channel have what are called narrative lectures.
Yep.
I call them narrative lectures. Anyways, that's where I go through the entire topic. And then I have that content outline I've explicated.
Yep.
And so if the investment vehicles, the three big ones for your success are options,
Yep.
munis, and mutual funds.
Yep.
Now on your SIE, there's a lot of overlap, but people sometimes I think, you know, don't do the work and they can drop some mutual fund questions. There's like, 20, 20, there's 91 questions there. 20 is options, give or take 5.
Yep.
And at least 20 munis, give or take 5, and then at least 15. Now I call mutual funds, that's packaged products. That's not only mutual funds, it's variable annuities, it's ETFs
Yep.
and ETNs. To answer the original question, if you went to the Series 7 playlist,
Yep.
I have 3 Series 7 playlists. So
Yep.
that's how I've tried to organize this channel. And I have Series 7 exam lectures.
Yep.
In the exam lectures, I have 2 muni bond lectures.
Okay.
So I have one where we underwrite muni bonds. You can pick them. I'm trying to get on the thumbnails. It's called thumbnails. I told you I'm technically illiterate, but I'm getting better.
No,
Anyways, the thumbnails, the pictures, I'm trying to make the pictures so you can kind of tell what it is. And the muni bonds have a picture of a muni bond certificate. One is the County of Los Angeles. It's beautiful. I should probably just put in big letters muni bonds, but it's got a picture of Los Angeles County GOs. The other one has a picture of San Francisco muni bonds. So those are the 2 muni bond lectures slides. I go through the slides. And then in the content outline explication, that's a separate playlist.
Yep.
So there's different videos in there.
Yeah.
And
that's where
and those that's exactly right. Same thing. I have one on mutual funds. I have one on the explication of that on options, and the munis there. So if you're going to load up on those investment vehicles, that would be it. Now, the other ones I don't think are a big deal, but they're there. So, I have about an hour on partnerships. That's like 2 questions. I don't know if you want to spend that hour or not. It's up to you. You might want to just use the explication. If I were thinking of it as like a time constraint, I would use the content outline as kind of like an intellectual inventory, if you will. And if you go through there and you understand what I'm talking about, I think you're in pretty good shape. And then maybe if you want to do a deeper dive, go to the narrative lecture on that, whether it be mutual funds or options. The other thing I've been doing lately, and I don't know how much you've been following along, but I've been trying to do some carve outs with some shorter things. Like I have one now on intrinsic value. Short to me is still like 15 minutes. I'm trying to get it down. But anyways, I have a covered call. I have a protected put. I have a spread and a straddle where I just do that.
Okay.
Instead of a whole hour on advanced option strategies. So I got like an hour and a half on advanced option strategies. So you could cherry pick those as well.
Got it.
But as your tutor, as your paid for accountability partner, so I work for you as your accountability partner, I think you're in pretty good shape. I mean, I can't imagine. I haven't found any holes in anything we've been discussing thus far. So
yeah, no, I appreciate it. And if you think there's anything, please let me know because I'm
if I think of it, and the same thing. Have you done any practice finals lately?
Not a full one. I did like a 80 question one.
Okay, I'd like to get a full one if we could, just to get a score.
Yeah.
And you're using Past Perfect, Kaplan, or both? What are you using?
Kaplan and STC.
STC. So if you can, if we can get a practice score, I'm not worried about you as long as you're in the 70 range. Okay. I would be a little concerned if you're below 70. I'm not saying you're not going to pass. I've had people pass, but we don't want to be at risk, particularly in your scenario, right? So
yeah, I did the 80 question one and I got an 84 on
Woo!
It. But
that's great. So do a full one.
Good, but I just want to be
do a full one. Do a full one, and see what that looks like, and check in. It's a relationship, not a transaction. I won't charge you if you just need a raw, or you dean. Hey, I need another 15-minute Zoom or something to go over. If you have a dean to-do list, maybe just think about a dean to-do list. I've actually put your tutoring session that you gave me permission for on the channel with a Friday premiere. That's how confident I am going to pass. As I told you, I never share anybody's tutoring session until they pass because I don't want to have somebody. What happened to Bo? I want to say, he made his mark. Right? Yeah. So that's how confident I am that you're going to pass. So for whatever that's worth. If I always joke, well, we used to do live classes, and kind of joking, kind of not. If you think I'm joking, I am. And if you think I'm not, I'm not. Every once in a while, somebody sees me walking back to the hotel and offer me a ride. And I would start the class by saying, I'm not accepting a ride from anybody who I don't think is going to pass because that's bad energy. So yeah, I said, don't take it personal. If you offer me a ride and I pass, that means if I hop in your car, say thank you very much. And so that's kind of how I feel about you. I can't imagine with all the work you've done, you've been dedicated, you've been disciplined, you've been organized, that is not going to get you the mark you need. We've talked about, what we think it could have been, but I'm sure you're going to redeem yourself. And to be honest with you, nobody cares once you pass the thing. I never had any, I had one of my best brokers and he just was not a good test taker, not as educated as yourself. But I mean, and he used to go out and tell people, man, if anybody knows this stuff, it's me. I had to take this test 5 times. People invest with you because they like you and they trust you. They don't invest with you because what you got on the exam. So like I said, you did your contribution, you said, delayed your test. How's that contribution going? Is the team still working its ass off? Or?
Yeah, it's slowed down a lot, which has been great. Okay. And so I've gotten more time to study, but it was definitely super busy at the end of the year.
So. Yeah. So yeah, I think, like I say, I think they just care you get it done. And then what's next? Did you already pass your 63 or 60?
I haven't taken the 63 yet. I'll take it after.
Okay. That should be, that should be a no-brainer, I think.
Yeah.
So, okay. But one step at a time.
Yeah. And then, okay, so I just had one question. I took it.
You want me to share the screen?
Yeah, I'll share it with you.
I got to let you share. Hold on. I got to make you the host. Okay. The host.
Let me make
the host more, or you are now the host.
Perfect. I just want to make sure.
Sure, yeah.
Downside protection.
Let me kill the recording.
Okay.
Because I don't like sharing copyrighted information. With your permission, I might sell this since it's free form. I never post anything that has Kaplan or Passport or STC stuff because I don't want to hear from their. You gotta kill the recording because I made you those. Could you kill the recording?